Takaichi has to gain the market's trust. She already gained quite a lot of support from the voters. They gave her a mandate to govern. Now the dialogue with the market has to begin. Probably the best thing that the Bank of Japan can do is look at whether that weekend is indeed inviting unwanted imported inflation. The government might have to get out of its own way a little bit. I'm not saying that fiscal stimulus should never be used, but the type of fiscal stimulus should be considered.
Japan's Sanae Takaichi has just won the strongest majority for a Japanese government in more than 70 years. Now she has to deal with an economy hindered by weak private consumption, an ageing population and inflationary pressures. The cost of rice, for example, doubled last year in Japan. Naomi Fink is Chief Global Strategist at Amova Asset Management. She joins us from Tokyo. Naomi, thanks for taking the time today. Now, looking broadly, what problem do you think Takaichi is trying to solve most? Is it slow growth, weak wages, or national security? And can she realistically fix all three of these at once?
Well, first of all, I think that the economy is doing a lot better than it was during her mentor's time, Prime Minister Abe. And paradoxically, that makes it perhaps a little bit more difficult to determine policy. In Abe's situation, it was pretty much appropriate to engage in fiscal easing and monetary easing in size simultaneously. However, we have a very different economy now. You mentioned inflation, and that makes a big difference. So if you were to engage in some sort of unfettered fiscal stimulus, then you also risk putting upside pressure on inflation. And that is what ails households right now, because we are seeing an expansion in growth. One of the reasons why households consumption is hindered is because of the rise in prices, especially in food. So usually inflation is the central bank's job. So fighting inflation is the Bank of Japan's job. And while the government might be able to put in near-term pressures to try to keep growth going, usually what its job really is to manage the long-term fiscal situation. And while nothing is going to fall apart tomorrow, it's more of a credibility and trust situation. Takaichi has to gain the market's trust. She already gained quite a lot of support from the voters. They gave her a mandate to govern. Now the dialogue with the market has to begin.
Right, so the markets now have had a bit of time to process this landslide victory. How do you think they will judge Takaichi now?
Well, for one, we still have budgets forthcoming, and a lot of investors are wondering how those budgets, well, what the content of those budgets will be, and how those budgets are going to be financed. Are they going to be debt financed, and how much? And if there is a feeling by the markets that debt financing is going over the top, then we might see that play out in bond markets. So I think it's fully possible for Prime Minister Takaichi to establish a healthy dialogue with markets and gain their trust, and also read the signals coming in when there are the initial thoughts about the budgets floated, whether they are going a little bit over the top when it comes to fiscal sustainability. And it's possible to adjust this way.
Right, the whole issue of debt has been something that that people have been talking about. I mean, how she made all these promises, which were quite broad during the election campaign, and Japan already has very high public debt. What do you think her threshold would be for too much borrowing, if there is any?
Look, Japan already did set some targets a while ago for fiscal responsibility, and it didn't have to do with any type of absolute debt to GDP ratio target, but they did say that they wanted to target primary balance. And Japan is actually looking like it will achieve that this year. So that's good. But then on the other hand, prior to the election, we heard about the abandonment of the year-to-year primary balance targeting. So if not that, then there probably has to be another metric signaling responsibility put in place. And I think at the moment, markets aren't really sure what that metric is yet.
Right. And looking at her policies, I mean, some of the issues that Japan faces, like Japan has struggled to raise wages for a long time. What specific policies in her plans do you think would actually help to push wages higher?
So I think the main issue here is real wages because nominal wages have been rising for quite some time. It's real wages that are struggling. And what's the difference? Inflation. So bringing inflation under control is very important. But again, that's the Bank of Japan's job. So there, the government might have to get out of its own way a little bit. And I mean that in the best possible way. I'm not saying that fiscal stimulus should never be used, but the type of fiscal stimulus should be considered. For example, I think there's been some talk of raising the primary tax threshold. That's not really a long-term measure. I mean, how did we get there? How did we get here in the first place? Because of inflation. And if inflation continues, it will also go away. That's a pretty solid temporary measure that's not going to create any problems for fiscal credibility. Now, I think there's been a greater debate about consumption tax. And I think for the moment, it's been in the context of do we temporarily exempt food from the consumption tax? And I'm not saying that that's necessarily a bad idea. It's just that consumption tax rises in general are hard-won measures. It's very difficult to impose it. If you do allow a period of exemption, then how likely are you going to be, or how credible are you going to be when you say you're going to reimpose it after 2 years? That has to be considered as well. What's that mechanism going to be? Because there's a lot that can happen in that 2 years. What's going to enforce that reimposition?
Right. And another big factor in the debate has been coming up is has been the currency. And are you anticipating? I mean, there's an argument between whether Japan needs a weaker or a stronger yen, and Takaichi argued in favor of a weaker yen, but then she kind of rolled it back. Are you anticipating a weaker or a stronger yen? And do you think a weaker yen would be good for Japan right now?
So one thing we have to keep in mind, especially since recently we've heard a lot of comparisons in the media with the Plaza Accords, is that Japan's currency is freely floating now. So the government might talk about it. I mean, the Bank of Japan also might consider it in interest rate setting, especially if the weak yen invites in inflation, imported inflation. But really, the markets decide the level of the yen. So right now, probably the best thing that the Bank of Japan can do is look at whether that weekend is indeed inviting unwanted imported inflation. And as for the government, typically intervention only really happens when moves get disorderly. And in the absence of those disorderly moves, perhaps it might be a good idea to wait for the Bank of Japan to implement monetary policy. And monetary policy is by nature slow and blunt, but it is the right tool to fight inflation. And if we do get some greater compression of interest rate differentials over time, then some of the pressure for the yen to weaken may alleviate.
And maybe looking at a more macro issue that's facing Japan would be the fact that the population is getting older fast. Does Takaichi have a real plan to tackle these demographic challenges?
Well, so this issue has been known for decades now. I think
Mm.
Japan's population started declining in 2010. So this is certainly not a surprise. And to some extent, it's a dynamic that all developed countries have to deal with. And some developing countries, China, for instance, also has an aging population. So what do you do when you have an aging population and you have higher dependency ratios? Well, there's a whole slew of policies you can put in place. One of them is already happening, which is a lot of individuals past traditional retirement age are on retiring and going back into the workforce. So that's one option. Another option, of course, is to try and shore up savings outside of national pensions, which are quite a liability item for the government. To delay retirement ages formally, for example, or just to try to ensure that growth rises because of total factor productivity, and does so at a faster clip than the increase in your liabilities. So there are a few tools there in the toolkit, and it's not the demographics are never really fast moving. It's just that we can't expect Japan in its current circumstance to grow like an emerging market country, because it's just not that. Its potential growth rate, according to the Bank of Japan, is 0.5%. So that the good news there is that that's a low bar to beat.
Yeah. Now, you mentioned China there. China is Japan's largest trading partner overall, with bilateral trade reaching around 322 billion last year. Now, Takaichi has taken quite a hard line on China. Do you anticipate tensions easing, and do you think that are you expecting tensions to ease?
Well, so I think this is probably more of a geopolitical question. And of course, if tensions do ease, then most likely we will have a rebound in the trade and economic transactions that were dampened because of the tensions. But I think it's there are more factors than at play than merely economic factors. But I guess on the positive front, we do have two very large economies in Asia, and longer term, it's very likely that these mutual trade partners will find some way to coexist.
Right. Well, we'll have to leave it there. Naomi Fink, Chief Global Strategist at Amova Asset Management, thanks very much for joining us from Tokyo today.